Hi guys, welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka, and today we are putting the spotlight on Suraksha Diagnostics. The 846 crore rupee IPO has kicked off for subscription. It's an integrated healthcare player that was incorporated in 2005 and provides pathology service, radiology testing and medical consultation. Now the issue is entirely an offer for sale and will dilute the promoter holding from 66% to 50% or so. It has raised over 250 crore rupees via the anchor book, and investors include the likes of Carnelian Bharat Amritkaal Fund, SocGen, Integrated Core Strategies Asia, Troo Capital, Tusk Investments and mutual funds like Aditya Birla Sunlife Mutual Fund, Bandhan Mutual Fund, JM Financial Kotak MF, Mirae Asset MF, Nippon MF and Quant MF. Now, joining me to take us through the growth and expansion plans is the management. Ritu Mittal, who's the CEO and joint MD of the company, is here with us. Ritu, great to have you on the show. It's been almost a 30-year journey for you, right? And you're making your stock market debut now. Are you confident of the IPO sailing through given the kind of response that you have got in your anchor book?
Yes, we are pretty confident of the IPO going through pretty smoothly.
Right. First of all, it's an entirely an OFS, right? And promoters are reducing stake to 50% or thereabouts. Tell us why now? What is the need to reduce the shareholding right now?
So this is practically the first monetization event for the early investors. And also OrbiMed, which is our private equity firm, has been with us for more than 8 years now. Therefore, we decided, and the company is of a certain scale, so we decided to go for IPO now.
Point taken. And first, give us a sense of the debt picture. How much of debt do you have on the books, and even cash-wise, how comfortable are you?
So we have negligible debt in the book. It's a small single digit. And cash in the books would be to the tune of around 50 crores today.
All right. Okay. So, talking about your business, you cater mostly to West Bengal, Bihar, Assam and Meghalaya. Now, 95% of your revenues came from West Bengal in FY24. My question is, going forward, how are you looking to improve revenues from other regions, and any plans to expand into any other region apart from your core markets?
So typically, diagnostic is a regional business. It is in fact quite a hyper-local business. And East has enough headroom to grow because it happens to be the most underserved and underpenetrated market as far as quality healthcare is concerned. Therefore, we would definitely want to focus in the East in the near and mid-term because there's enough headroom for growth for Suraksha. And it is a trust-based business. Therefore, it is easier to expand in territories that you're already known. So we still have around 11 districts in West Bengal to cover.
Right. So would you be focusing in on the northeast, or which part of the region would you be focusing on in terms of expansion, and how would you be looking to fund those expansion plans?
So we will be focusing on West Bengal and northeast. Beyond that, we will go into Bihar, Jharkhand and Orissa. We are an East-focused diagnostic business, and in the near and midterm, we would continue to do so. We have in the past also grown by cash accruals that we have generated, and the company will continue to do so.
Right. Let's talk about the financials then. You've been able to maintain a revenue run rate of over 20% post-COVID as well. And in FY24, you saw a very solid growth in your bottom line as well. What led to a sharp jump in profits, and are these growth rates sustainable going forward?
So you will see that the EBITDA margins are expanding, and this is because as we are growing, the economies of scale is setting in. And the fixed costs are getting divided over a larger base. And therefore, you see the EBITDA margins getting better. And we expect to keep growing our EBITDA margins further, as has been displayed by our peers.
In terms of margins, you're the second best in the industry, right? Margins at over 33% or thereabouts. you mentioned economies of scale, but what's been the key driver, and give us a sense of the margin profile? Because if B2B is low margin and your mix is changing, consultations, revenue from consultations have gone up, which segment is contributing the most and which will continue to contribute going forward?
So 94% of our business comes from walk-in patients. So 94% is B2C business for us. And B2B, like you rightly pointed out, is a discounted business, which for us is only 6%. And therefore, it is this, and you will see our average revenue per patient also is continuously rising. And so is the test per patient. This is because we are adding newer high-end tests to our menu. And therefore, we are seeing this growth in revenue as well as EBITDA per patient is also increasing. And therefore, the EBITDA margin is going up.
Right, but in terms of profile, radiology, pathology, consultations, doctor consultations, are these which of the areas would contribute to the margins, which you're looking to spruce up?
So definitely it's the diagnostic that contributes the highest to the margin, and radiology and pathology per se have similar margins. So our growth drivers will definitely be diagnostics. Polyclinic is an aid to the patient to consult in the same premises. And also we have the first right to those prescriptions for the diagnostics. Therefore, that is polyclinic is something that aids diagnostics.
Okay, got your point. In terms of average revenue per patient, you said that you've seen a steady growth, but from FY23 to FY24, it was a bit muted. But in Q1, you've seen a good improvement. So, what kind of a growth are you expecting, particularly for FY25? Would it be better than the previous years, and by how much? And for the next 2 to 3 years, are you working with any ballpark figures in your mind?
So, we definitely do see a growth in revenue per patient. And that is because, like I mentioned, we have added a lot of high-end radiology tests. And also we are focusing on fetal medicine, which again is a lot of radiology and pathology tests. Therefore, our revenues are constantly going up, and we believe we will sustain these revenue per patient.
Sure. In terms of market share, you had a 1.3 to 1.5% kind of a market share in FY24. In terms of further expansion, any game plans, and who is your closest competitor at the current juncture?
So if we look at the market share that we have, we are talking about the entire north, east and eastern part of India, which has a population of around 40 crores, whereas Suraksha is present in a very small part of the geography. Therefore, the market share looks small. But if we were to compare the market share that we have in areas where we are heavily present, it would definitely be much higher. And going forward, the plans of expansion is that we want to set up hub and spoke centers in all the cities and towns of the districts. And we want to cater to the rural population through franchisee network. As far as competition in the East is concerned, we do have Pure Path Play. They have been there for a long time, but our business model caters to B2C, whereas theirs is B2B. So it's completely different clientele that we are looking at. And of course, there are regional standalone centers, which are also a competition. But the organized sector is growing and the disorganized sector is shrinking in diagnostics over the years. So we think the trend will continue, and we think we have a great journey ahead.
Sure. Last couple of questions. Any acquisition plans on the anvil that you would look to make going forward?
So we are definitely open to acquisitions, but Suraksha has been built on two pillars: quality and success. That is not something we are ready to compromise in just for numbers. So we will look at assets which believe in quality and believe in customer focus.
Okay, so you haven't really zeroed in on anything just yet.
Pardon?
You haven't really shortlisted or zeroed in on any acquisitions at the current juncture.
Not yet. We are exploring a few, but we haven't zeroed in yet.
Sure. Last question really, in terms of return on equity, it stands at somewhere around 14% or thereabouts. In terms of shareholder returns, what can they expect, and current valuations, do you think they are justified?
See, valuation is a matrix that comes out of your future performance, your growth potential, and of course the sector sentiment. And the BRLMs have gone and talked to a lot of investors. We have gone and done a lot of market shows, and this is the price that they have come up with, and the board has accepted.
Sure. And post-COVID, how has the demand scenario been for you guys? Give us a sense of that.
So post-COVID, what has happened is patients have become more aware, and they want to get tested by branded players. They want to get tested by names they trust, and therefore we see a good growth in our business.
Point taken, Ritu. With that, would like to thank you for taking out time and joining in and sharing your growth plans with us, and wishing you all the best for the listing. You've got some marquee names in the anchor book. Wishing you all the best, and of course, look forward to touching base with you post the listing of the stock as well.
Thank you so much.
Thank you. Thanks a lot. Well, that was the management of Suraksha Diagnostic. Of course, with that, we've come to the end of IPO Watch. But you guys stay tuned to Money Control for all your other news and updates, and I'll catch you on closing bell at 3:30 p.m.